Sterling and Vaughn, Global Enterprises, LLP Strategies. Private Placement Program, PPP. Report. Comprehension of Trustee Duties, Accredited Investor Requirements, and Variable Dividend Framework 1. Trustee Responsibility to Beneficiaries. The foundation of this private placement program lies in its trust structure. The trustee acts as a fiduciary whose responsibility is to manage program assets on behalf of the beneficiaries. This fiduciary duty requires the trustee to protect assets, safeguard funds placed into the trust through careful allocation into approved service platforms, generate dividends, utilize the Sterling and Vaughn service base, structured arbitrage trades, private placement participation, and access to interbank platforms to generate dividends for beneficiaries. Act in good faith. Ensure all investment activities align with the trust indenture and deed of trust. Report transparently. Provide clear dividend reporting and disclosures, maintaining confidence in the trust arrangement. Compliance. Disclaimer: nothing in this report guarantees performance. Trustees act in a fiduciary capacity, but cannot eliminate the inherent risks of interbank markets or investment exposure. 2. Accredited investors. Definition and role. The program is exclusively for accredited investors under Reg D, Rule 506(c). An accredited investor is an individual or institution meeting financial and professional thresholds, such as individuals, annual income over $200,000 or $300,000 joint, or net worth over $1 million excluding primary residence. Institutions/entities, assets exceeding $5 million, or licensed professionals with securities qualifications. What accredited investors do. Accredited investors are entrusted with private offerings because they understand the risks of illiquidity and market volatility, have the financial cushion to withstand losses, possess the maturity to evaluate complex opportunities without reliance on retail-level protections, approach investments with discipline and compliance awareness rather than short-term speculation. Compliance disclaimer: participation is limited to accredited investors only. The firm reserves the right to verify accreditation status and to deny access to any applicant who does not meet regulatory requirements. 3. Differences in attitude and maturity. The distinction between accredited and non-accredited investors extends beyond wealth. It is a matter of perspective and maturity. Accredited investor mindset. Patient and long-term focused. Accepts variability of dividends. Prioritizes compliance, documentation, and due diligence. Engages trustees as partners, not adversaries. Non-accredited/imitator mindset. Seeks guaranteed or immediate returns. May overextend financially to qualify. Underestimates risk exposure. Often disregards regulatory requirements. Compliance disclaimer: attempting to participate in the program without proper accreditation constitutes lawful misrepresentation and will result in termination and potential legal action. For consequences of misrepresentation, some clients may attempt to falsify accreditation to gain entry. This constitutes fraudulent misrepresentation and exposes them to severe consequences. Termination of participation. Trust officials will expel such individuals immediately. Forfeiture of capital. Misrepresented funds may be unrecoverable due to breach of trust agreement. Legal liability. Exposure to civil penalties and potential criminal charges for securities fraud. Permanent exclusion. Blacklisting from Sterling and Vaughn and similar fiduciary programs. Compliance disclaimer: any misrepresentation of accredited status will be treated as securities fraud and reported to regulatory authorities. Investors are solely responsible for the accuracy of their submitted qualifications. 5. Variable tier dividend schedule. The Sterling and Vaughn PPP operates on a 3-tier system with dividends tied to interbank market conditions. Tier 1, $10K minimum, dividends every 90 days. Tier 2, $100K minimum, dividends every 30 days. Tier 3, $250K minimum, Dividends every 7 days. Characteristics of the dividend model. Variable nature. Dividends fluctuate with fair market value, arbitrage performance, and liquidity conditions. No fixed guarantee. There should be no expectation of fixed or minimum returns. Investors must understand this is not a fixed income product. Tier benefits. Higher tiers enjoy more frequent distributions and greater exposure to premium structured instrument pools, though variability applies to all tiers. Compliance disclaimer. Dividends are variable and subject to market forces beyond the firm's control. Past performance is not indicative of future results. No fixed or minimum return is promised. 6. Risk awareness. The PPM emphasizes that participation in a PPP is inherently high risk. Potential risks include market volatility affecting dividend levels, lockup restrictions limiting liquidity, counterparty or platform default risk, shifts in regulation affecting program continuity. Compliance. Disclaimer: all investors should consult with licensed financial and legal advisors before participating. This report does not constitute an offer to sell securities. Participation is at the investor's sole discretion and risk. 7. Conclusion. The Sterling and Vaughn Global Enterprises LLP private placement program is structured to balance fiduciary trust obligations, accredited investor sophistication, and variable dividend opportunities. Trustees carry the duty to generate lawful, market-based dividends for beneficiaries. Accredited investors are uniquely positioned to participate due to their financial capacity and maturity. Misrepresentation carries harsh consequences, safeguarding program integrity. The variable tier dividend schedule reflects real interbank market dynamics, requiring flexible expectations from participants. This report underscores the program's alignment with fiduciary duty, regulatory compliance, and the realities of interbank-based wealth generation. Appendix A, Legal and Regulatory Framework. Regulation D, Rule 506C, permits issuers to broadly solicit and advertise private offerings provided that all purchasers are accredited investors. Requires verification of accreditation, not mere self-certification. Exempts the offering from SEC registration, but subjects it to anti-fraud provisions. Accredited investor definitions. SEC Rule 501. Individuals with income $200,000 or $300,000 joint. Individuals with net worth $1 million excluding primary residence. Entities with assets $5 million or all equity owners accredited. Licensed financial professionals, Series 7, 65, or 82, qualify by certification. Fiduciary standards for trustees. Trustees must act with duty of care, duty of loyalty, and duty of impartiality. Breach of fiduciary duty may expose trustees to civil liability. Anti-fraud and misrepresentation. Misstating accredited investor status constitutes securities fraud. Violations can result in rescission rights, civil penalties, and criminal enforcement. Risk and suitability disclosures. PPPs are considered high-risk, illiquid investments, not suitable for retail or unsophisticated investors. Investors must rely on independent advice for suitability determinations. Compliance disclaimer. Final statement. This report is provided for informational purposes only. It does not constitute an offer to sell or solicitation of an offer to buy securities. Participation is restricted to accredited investors under SEC regulations. All investments carry risk, including possible loss of principal.